All right, so let's go into the price action. You survived. You made it here. So here we have the 15-minute time frame from today. This is the E-mini NASDAQ, and this is the 15-minute time frame. This is where I tell you to start. This is your bellwether chart. Naked chart. Okay, pause the video and look and see if you see anything of any importance. Which swing high would you anchor? Where is there a stop run on buy stops? When you're ready to listen to the rest of the video, unpause the video. Some of you never pause the video. All right, so we have 8:30 marked here. Okay, very specific, right? Element of time, 8:30. Why? Because there's news that comes out, okay? Employment data came out today. So at 8:30, the market, from that point on here, look to the left. What do you see? What's the first swing high you come to? Right there. Is that hard? Was that complicated? No, very simple. So this high here, draw that out in time, and you'll get this right here. Okay? But watch. With this run right there on a 15-minute time frame, what do you do with it? Well, you start stripping down from a top-down 5-minute, 4-minute, 3-minute, 2-minute, 1-minute. So once you have this level on your chart on a 15-minute time frame, you drop down to your 5. Everything's transposed from the 15 to the 5-minute. You can see it trades above it here, and the market starts to trade lower. When it's trading lower in here, you're going down into what? The 4-minute. Here we have it here. Is there a fair value gap in here yet? Nope. There's one right there. See that? Right there. So we traded below this swing low. There's a fair value gap right there. You can enter there, right on this candle's high. You can go short there. What's the rules? Do you remember what the rules were? You can put your stop above this here or the swing high. There's a swing high right there. Candle number 1 or the swing high. Does it hit your stop? No. This might be more than you're willing to absorb, but there's micros. You're only trading $2 per handle there. It's not $20 per handle, okay, or 4 ticks. It's $2 for each tick, or 50 cents each tick. So that's not a lot of money being risked there. But I want to go down and really fine tune it. So I'm dropping down through all the time frames: 5, 4, 3, 2, 1. And if I'm being completely honest with you, I have those charts all open at the same time across my desk. So I'm constantly referring to all of them. Now you can do that cycling through rather quickly and just look for the form. In the 2-minute chart, you don't have a fair value gap in here until there as well. Same entry, and you can put a stop there as well. And on the 1-minute chart, we have the run here, the break below the short-term low here, fair value gap, trade up into that. Look how many times it gives you a chance to get in. This candle, that's 1, 2, 3. Then it continues even lower. So you're getting a really, really tight entry there. Now, some of you are going to say, oh, you know, this guy's talking about hindsight. I got you covered. I actually went in and traded this today on TradingView, and you'll see me entering right here and riding down and taking out my exits below an old low. But I'm going to also teach you how you can use the model here and use the exit strategy I used today for external range liquidity. Oh, something new. So let's go over to TradingView. All right, so I'm going to kill 2 birds with 1 stone here. I don't use the replay button. This is going to be the first time you've ever seen me use it, but it's only for the purpose of teaching how you, if you can't watch live data, okay, just use this. I guess this is the best thing you can, I guess, have as an alternative. But also, I'm not sure if I mentioned this in the past, but if you are going to tradingview.com and you're pulling up the symbol NQH2022 and you're going into a 1 minute chart, the data is delayed here. And to be quite honest with you, I don't recall if it's 10 minutes or 20 minutes or 50. I don't know exactly. I don't remember what the delay was, but I pay the $4 a month subscription rate to get the E-mini data. And I also have a professional account. So I'm not sure if that $4 a month is because I have a professional account or if it's just $4 for anyone. So you'll have to investigate yourself to see if that's something you want to do. You don't need to have that data while you're learning, okay? You can use this function here. So while I do have real-time data, because if I didn't, you'd see like a little orange D up here, letter D. And that would basically communicate to anyone that would see the chart that it's a delayed data. This is live data, and I have it scroll to this morning for February 3rd, 2022. And I have my chart delineated with the 15-minute high with that level. And I'll show you this, and then we'll zoom back out to a 15-minute chart. You see everything as it was, because I'm going to show you there was actually a trade entered on this today. But you want to have a vertical line delineated on TradingView. And the way you would do that is simply go in here, pick the vertical line, and drop it right there at 8:30, and there it is. Okay. So for the replay button, and I feel weird just doing this because I just don't do it, but I have to do it because I know students need this resource while they're learning. Okay. But I don't use this. My mentorship that paid me to get education knows I never even use this. Okay. But I'm showing you so that way you can back test and practice and look at price action in a way where it means something more than just looking at a static chart. All right, so it started at the 8:30 hour. Our line here is at that 15-minute high. So what we're expecting is a run above that high, okay? And I'll keep it kind of quick. I don't want to spend too much time with this. So clicking the play button, we're running above a short-term high right here. There's a fair value gap right there, hit that. Now watch, it should sell off. That's not what I want. I want to use this high back here, but if you're a scalper, you could take that low out right there, and that would have been a trade there as well. But for the daily range, which is much more significant, I'm using the 15-minute high. I'm bearish on the day. I'm expecting lower prices because we've already went up a lot on the daily chart. So now, if you're waiting all day, you might look at this and say, oh, I missed it. There's nothing for me to do. Don't think like that, okay? Because the equity market opens at 9:30. Stock markets start getting really busy and volatile around that time frame. And we're coming up on it in a few minutes here. And usually, not always, but usually the first run at 9:30 is opposite to what the real move you want to be doing. Not every time. Now here's a 9:30 volatility. Look how crazy it gets. Okay, it's creating a low with another low here. So there's what's building underneath that. Sell stops. Traders are being induced into thinking long trades. Go long, go buy and get in there and go high. Buy low, sell high, right? But it's sloppy in here. But it's keeping these lows over here intact. Above these highs, that's where my interest is, okay? So I don't have a trade until we get up above this level there. And this is on a 1 minute chart. Okay, small little shallow run. We want something that's going to push through it. No fair value gap formed anyway. Okay, I just paused it right there. Now, look at this initial poke above that high that we've drawn a line on. It went above it. It went down, yes. Did it create any fair value gaps in there? No, every candle overlaps. There's no gaps there, okay? There's also no swing low taken out. So there's nothing in here yet. Now we have a higher high running above this high and the high we were looking at on the 15-minute time frame, which is denoted by that horizontal line. Right there, now we have the likelihood. If we're watching it live, we're waiting to see, does it break lower? If it breaks lower, where is there a swing low? Right there. So if we can trade down below that swing low, and as soon as it does that, look in the highest high that forms and that low. See if there's a fair value gap that forms. Right there. We went below it after taking out the high. Here's your number 1 candle, the number 2 candle, and the number 3 candle. So there's your gap right in here. So if it trades back to this candle's high plus, I don't know, 1 handle or 1 tick, maybe 2 ticks, whatever you believe is an ideal entry for you. The easiest one is just go 1 tick above that, and it removes all the doubt. There's no guesswork there. There it is. And where's your stop loss going to be? Above the high of candle number 2. Or you can use above candle number 1, which creates a swing high. Okay, whichever one you can afford and allows you to put the trade on. Some of you are going to look at this and say, oh, this is too much risk. Okay, then don't take the trade. I'm giving you a model that works. Boom, right there. That candle, if you had a limit order right there, that would trip you in going short, and your stop would have to be above here. Another one right there. There's your second entry. Right above this candle here, that's entering. That's your limit order getting in. Go short. Same stop. Third opportunity. Almost completely closes in all that range right there. See that? Right there, if you see that live, it feels like it's going to keep going higher because this candle at one time, when it was at the high, was all green and bold. You need to trust and train yourself to look at this pattern as it's forming, because once you see dozens of it occurring, it changes your perspective. You don't get scared. In fact, it's fascinating to anticipate, okay, it went here, so now it's going to go lower. So at that point, right there at that entry, from this candle's low to this candle's high, where's about 50%? About right here, right? So before we go any further, where do we take our profits? Well, you have a fair value gap right there, right? See that? Same thing, just going up. Candle number 1, it's high. Candle number 2, candle number 3, the low. The range between candle number 1's high and the third candle's low, that's your fair value gap. So if you're selling short up here, you can buy it back below here because you're below 50% of the range that it ranged from high to low. You're at a discount down here. So there's your first target. Remember those equal lows down here I was telling you about? What's below that? Sell stops. So you want to be taking profits here and or here. This is ideal. Okay. Let's go back and watch the rest of it. Right there. That's it. These are minute candles. So you're selling short here, or maybe you entered on the first one here. So that's minute 1. So 1 minute, 2 minute, 3 minute, 4 minute, 5 minute, 6 minute, 7, 8, 9, 10, 11 minutes. And you have 10, 20, 30, 40, 50, 60, we'll call it 60, we'll just call it 60. 60 handles in minutes, okay? That's literally over $1,000 in a matter of time that would probably be longer spent for someone that smokes a cigarette. Think about that. If you are going to hold it, focusing below these lows down here, okay? Trust the bias. That type of move right there is intended to upset traders and get out. And if they trail their stop loss too short and aggressively, they get knocked out right before the big move comes down and takes out the lows down here. So we're looking at right in here. Well, let's look for 14,680. There it is. Now, is that a lot of time? Getting short here, weathering some of this. You already took first partial down here. So even with this pulling back, your stop stays here. You use the first partial to kind of like quench that desire to roll your stop. Don't do that. If you do that, you're probably going to get stopped out because you don't have the understanding or the experience to know where to place a protective stop while it's being trailed. Once it takes this low out down here, and if you want to hold on to position, then you can roll your stop to here, but not before. Why? Because you've taken out a significant intermediate term low. This low to this high on a 1 minute chart, that's an intermediate term price swing. So it's taken out here, but it's also a full target for selling short up here and getting out down here. So what was the rough price level we used? Well, let's look at the high here. 14,000. We'll just call it 14,800 just for the sake of the math. So 100 handles is 14,700, and then we have the 80, 14,680. So 120 handles. That's a significant price move. Using exactly what I've taught in this model. Now, for those out there that say, oh, this replay button, he uses the replay button. That's the first time, and make sure you remember the date, because that's the first time you see me ever do market replay on TradingView. So if you look at this area in here, I'm going to show you paper trading account. Oh, I said we were going to talk about that. Here is the account history. Here you go, the time. Put a short on. Let's take a look at where that actually occurs on the chart. I'll show you the execution. Right there. 2 minis. 14,792 and a half. And I think I was reading that wrong down here because I was showing you the exit. Yeah. Close the short position. Yeah, I read it wrong. Sorry. So the entry price here, selling short 2 minis at 14,792 and a half, using the fair value gap, holding on to it. First partial here, 14,675, and then the limit order I had here was 14,647. So how does that look on the grand scheme of things? Getting short here with that logic, below the sell stops, down here, and in the limit order there. And hopefully you've got something from this, and you've seen that there is obviously more to it than just fluff. It keeps repeating. How many examples have you seen already since I started teaching this? It's there. And these are the two. This is the first order covered, and this is the second one. Okay. Don't look at this and say, oh my goodness, he's got 52% return in one day on first trade. That's nothing. That's nothing. But I don't want you thinking that's what you can do. Okay. Don't think that. Please don't think that at all. All I want you to do is practice on this logic. It's a simple process. So now, in closing, I revisited the idea of this high to that low. That's your range, okay? And if you put a Fibonacci on that, man, I tell you, I wish I had this stuff when I was coming up. Guy coming in here for free. Look at this. So we have 50%. That's your equilibrium. So everything above that price level, because this low to that high, that's our price run, and 50% below it is discount. So there's your little fair value gap right there. You see that? That right there. That's your target going short there. But this is internal range liquidity because it's internal relative to this low and this high, that range. So it's in the middle of that range, which makes it internal range liquidity. What is the stops below these lows down here? External range liquidity. So partials, internal range. External range, close your trade. Very simple logic, isn't it? Is there a lot of moving parts? Did I confuse you? Simple, isn't it? You may still have questions because you may be entirely brand new to charting and trading. That's normal. But by practicing and following along in this video series, it's an ongoing mentorship. It's not going to stop next week, okay? This will help you understand. But I have to give it to you in bite-sized pieces because if I give you too much, it's not going to be meaningful to you. But the logic, hopefully, even if you don't understand what I'm drawing you to in your own chart, like you can't find it yet on your own chart, I'm showing you exactly where it forms. And is every example I've shown you happening in the time of the day, the same way each time, and is it performing as I taught it? Yes. That's a model. That's a trading plan. That's an executable idea that you can go in and engage with a demo account. And over time, you get good at this, you determine what you want to do with it. I'm never going to say go and trade live money with it. But I already have people already that have been trading for a while. They're a little bit more versed than some of you. If you're brand new, it's okay. But traders that have been doing live fund trading for a while, this really resonated with them. And they could see it. And they went in there this week and they were catching trades. Real trades. And like I said, I don't want the credit for that. But I already know this stuff works. So sending me emails telling me that this is amazing and it's great, please don't do that. You don't need to do that. I already know it works. I'm giving it to you so that way you can be fascinated by it. Okay? This is just one model of dozens that I have. And this is the stripped down version. So hopefully you find insight and obviously benefit from following it. And if you don't, I'm sorry I didn't scratch that itch for you. I'm sure if you study other things in my YouTube channel, you'll probably find something else that tickles your fancy. Until I talk to you next Tuesday, enjoy your weekend and be safe.